Hello, hi Berlin. Bringing you greetings from chilly Estonia. So in case the weather is getting really bad, then it's because of me. Because this year, Estonians have seen no single summer day. Right, should go back. Right, it's here. I've been in tech industry since mid of 90s, because I was the first IT lawyer in Estonia. And Estonia is one of the most tech-savviest countries on earth. And then I joined the stock exchange industry and the stocks and the stock markets, and also served as the CEO of NASDAQ in my region. And now I say that IPOs saw yesterday. Why? Let's look at the trends in the industry. What is the IPO? IPO is the initial public offering. It's meant for companies to raise the funds from the whole round of people, from wealthy people, and once they invest, they get tradable securities. So you can invest, and then you can exit anytime you want to. And IPOs were a wonderful tool for raising the capital for the growth, to get access to the large amount of the capital. But now, if we look at the trends, then there's plenty of money available by the private investors. The VCs and the angels, they can fund hundreds of billions for the growth capital. If we look at the crowdfunding markets, I tried to get the recent numbers from the last year. The year before that, 2015, the whole crowdfunding market was $34 billion. Now they think it's going to double every next year. And the latest trends is the ICOs. ICO is the initial coin offering. It's like the initial public offering, except when you invest through the public offering, when you invest through the stock markets, you get securities which give you as an investor the rights, and the company always know who the investors are. Now the ICOs is a bit of a different story, and it's right now a bit of a gray market, but it's booming. So keep an eye on the ICOs. An ICO is the initial coin offering when the companies launch the coins. You as an investor buy the coin that is issued by the company, but very many cases, 9 cases out of 10, you as an investor don't get much rights with the coins. So you just get the coin that is issued by the company, but it's not sort of securitized. And that's why I call it, it's a bit still gray, but quite many companies do it in a way that the coins will be securitized. Coins give you, as an investors, the rights in the company. And also some funds are issuing the next, or raising next round of the funds through the initial coin offerings. So when you invest, you actually get the fund notes or fund units with it. And the second thing around the ICOs, which is still the gray area, is that you don't know who the investors are, because the coin offerings are pseudonymous, and your investors are going to be pseudonymous. Once you invest, then you have actually sort of no link with the company. But nevertheless, I see that these things will be solved soon, and the ICOs market is booming. When we look at the IPOs, then, starting from the first thing is eBay, Amazon, Google. They've been raising VC money less than 7 million. 2004, less than 7 million before doing the IPO. Now, if you think of the present fundraise, I've listed Facebook, but there's the Uber, there's the WeWork is the latest. They've been raising private money, billions of dollars, which means that the growth is funded by the private investors and not the stock market's participants anymore. So companies go for the stock markets not to raise the funds for the capital and actually provide investors to growth, but they go to the stock markets to exit. And this is totally different philosophy of the public offerings. It's about exiting and becoming an exiting tool, not the growth tool. And one more thing around the stock markets, which is not tech age anymore, is that you can trade 6 hours a day. 6 hours a day. And imagine if it's the US markets, you can trade 6 hours in the US time. And I see many of you taking photos. You have this tool, which a phone, which should be able to give you access to the stock markets 24/7, but actually it doesn't. So that's the thing. It's expensive, it's local, and it's over-regulated. The power of the blockchain. This is how the stock markets work right now. There's very many intermediaries between the companies who want to raise the funds and between the investors who have the funds, when we talk about the traditional stock market. There's the broker, which is a local entity which actually takes your trading orders and passes it to the stock exchange. Why? There's the central bank involved, the clearing and settlement agents, the depositories or state agencies, so kind of the bunch of intermediaries whose main role is actually to provide the trust, saying that, okay, I took your trading order to the stock markets, and I now say that your shares now has been transformed to the new participant. And this is actually what the blockchain as a technology is doing for the stock markets or with the stock markets. There's been a lot of questions around whether the stock exchange or the blockchain is the next big thing. It still needs to develop as a technology, but blockchain solves one big issue in very many industries, and it's the trust issue. It's the technology that enables you to exchange the values and exchange the assets. That's what Funderbeam did. We built the trading platform, the global stock trading platform, on the blockchain. And we thought that nowadays the technology is so powerful that it doesn't make sense to have the Bloomberg and the Angel List and NASDAQ as separate entities. So you can, when you talk about Funderbeam or think about Funderbeam, it's like the Bloomberg and Angel List and NASDAQ had a baby. So that's the data to understand the startup market. There's the investing platform, and there's the trading platform. And we run it on the blockchain, and we run it globally. We run it without any intermediaries. And what we did is we built the legal structure. When I said about the ICOs, IPOs, and investing, is that in Funderbeam case, we always issue the tokens which grants investors the rights in the underlying asset. So we syndicate funds into one investment entity, and this investment entity is becoming the shareholder in the underlying asset. And this gives us the opportunity to raise funds globally. By now, we have investors from 94 countries all around the world investing into startups. And for us also, it doesn't matter where the startups are. Investors can invest in any of the startups. So the link between the investment pool and between the startup is actually armed with rights for the investors. Technology-wise, those who know, how many of you actually know about the blockchain and the technology of the blockchain? Some, right, okay. We use Bitcoin blockchain, we use public blockchain, and we use the colored coin technology. So this means that actually we color one of the coins, very small coins, with the information. But, and why we use the blockchain or Bitcoin blockchain is that we started to build it in 2015, and then the blockchain, the Bitcoin blockchain was much more mature compared to the Ethereum. When we now look at the latest ICOs, then I haven't heard of the ICOs run on the Bitcoin blockchain. All the ICOs, and especially the recent ones, are on the Ethereum blockchain. So the same goes with us, is that we actually built the whole platform in the way that it is the technology agnostic, and we are now flirting with the Ethereum blockchain. So there are several blockchains, but I think in the future, the blockchain sort of going to be interlinked, and you still have the, as an asset holder, keep the assets in your wallet. But it might be different blockchains. And this is actually a next big trend, what we see in the platform, that successful exited entrepreneurs are building their own funds. But the new generation of the fund managers, they say that the LPs and the VC structures, again, doesn't work anymore. And they want to do it more globally, they want to do it more agile, and kind of more fast. So quite many funds managers come to Funderbeam platforms and say, hey, we want to raise the funds using the tokenization and investing through the platform, which means that actually the full portfolio of the funds is becoming tradable. So this means that there's one fund, but several entities. And you can trade it right away. And yeah, you see it. If you go to Funderbeam platform, we keep everything transparent. And in our case, we put a lot of effort to the user interface, because users need to understand what to buy, what to sell, not to click the sell button when you want to buy. And you can see the whole bulletin board, which normally investors don't see. This is what the professional brokers do. So you as an investor can see who is selling, how much, what's the price. And you can set your own price of your investments. We launched the marketplace in 2016. And one of the main questions what the VCs ask from us is that, do you really think that there's the liquidity in the startup market? Do you really think that investors want to invest in a way that they can trade with the startups right away? And the second question is about the startups. Why would any of the startups raise funds sort of publicly, even if the investors are professional investors and they become tradable? I'll share one story. It's the Funderbeam story, because we did raise our own funds through the platform. We got 28 countries investing into Funderbeam. Now, these investors all of a sudden became the ambassadors of our business. A guy from Japan, he said that I like your platform so much, but it's not in Japanese. I'm the web developer. I'm going to build your platform in Japanese language. So he did it. There's a guy in Sydney who invested in Funderbeam, said, I know the Sydney crowdfunding law very much, and you could also get the license in Sydney. I'd like to help you. In UK, the investor that invested a nice amount of money, he said, hey, you don't have the market maker. I will become your market maker. So I think this is the additional power of raising funds publicly, that you get this kind of amount of investors that become your ambassadors. So private capital is eating the stock markets and is killing the stock markets, especially when the ICOs are becoming the booming. I haven't seen any professional stock market investors who's investing in some of the stocks and says, hey, I've invested into this stock. No. But in the startup, investors are sharing, hey, I've invested, I'm doing so nice, it's the good company. Oh, why don't you use the app, because I've just invested there. That's how the industry is supporting each other. But what's missing in the private capital, when I talk about that the VCs and the ICOs are killing the private market, is the liquidity. And now someone has to build the liquidity. And that's the next big boom. The ICOs have to be more kind of, not regulated in the legal way, but still more regulated. Seeders have opened the second market and the trading already. Now the angel list is talking about it. So startups are becoming tradable, and startup investments are becoming tradable, and that's the biggest fear for the professional stock exchanges. Email me if you have anything to ask, tweet, connect me in LinkedIn. Thank you.